Good day. It's 9/13 of 2012. The time is 9:08 a.m. Pacific Standard Time and 12:08 p.m. New York time. Lunchtime. Featuring the TQQQ. It's a bull ETF pro shares, you see. And it's at all-time highs. And we like to trade this long, and you can also trade it short too. One of the things about it is that we tested this first wall of resistance. Now, it is an FOMC meeting. Everyone's expecting QE3 today, and they'll get it. It's more of a political reason, not for monetary purposes or the value of monetary value. Let's use the word monetary value. We're missing that part of this whole equation with the FOMC today. But I just want to feature that bull, that TQQQ, which is a representation of the Nasdaq Composite and the Nasdaq 100. Right here, these two that I'm pointing that are slightly up on the day, going into Mr. Bernanke's rulings. So we're at multi-year highs. We had that little pullback and tested the 10 and the 20. You can see here how it's grinded off of these bottoms. We had a great rally over here in this bull when we were buying it back at the bottom of the austerity packages in Europe in 2011 in December, and we just kept going all the way to the top, but we got out. It was time to get short this thing because it had to come down and test, but has come up and broke the highs over here. So once again, it is a September year-end update on the TQQQ bull. We would caution people that the upside is limited, meaning that yes, we can get an announcement that could take the bull higher up here. It's possible, and right up here. However, any movements up based on that FOMC meeting in this particular ETF would be to sell into resistance. That is healthy. It's had a great movement down here at $45.60. These things just don't happen overnight. Now, we do them intraday when this had a much bigger price range, not 72 cents. That's a very narrow range, 72 cents so far this calendar morning intraday. We would like to point out, though, that you're going to have to consolidate here. You're going to have leadership stocks coming back, such as Apple, such as the Google trades, and a lot of the other high beta stocks that trade within the Nasdaq 100 index and the Nasdaq Composite for this particular trade. It's more of a longer term overnight position management. You just let it keep going. It goes narrow, but it's all the way up here. This is the kind of gain that back on 725, which wasn't long ago, that's where it made this move, the biggest part of that gain. Yes, this was right around 725 when this would not break it, and the 200-day moving average was rising at the time, and we kept testing that 200-day simple moving average and stayed within the narrow dollar price ranges, both long and short, throughout the consolidation phase before breaking out to all-time highs and testing the highs, then breaking the all-time highs, and then pulling back and testing these daily moving averages. What we would be saying to people is that the upside of resistances is going to be harder to push it. So it is reaching a top up here. It can break higher, but the best thing to do is you start selling into here, because it's been, these trades take a couple of months in a lot of cases, especially being in this bull cycle breakout. How far they go, you just let them keep going. You let them keep consolidating and taking out multi-year highs. Well, this is what you want to see. And that's exactly where that support level is. This is where that gap down level was. So we're sitting above there. And we got through here. So it's going to be very narrow range. Keep your eyes out on the bull. Keep your eyes out on the bull. This is what these tops look like. This is how narrow range it is now. $63 almost up here. The other day, well, it was right up there. We can take a look at it. So we can see where the highs were. There were 60.34. Or I mean 61.06, and then we had 62.87, and that was a nice high, and 62.86 and 87. And let me show you, when Google was making its all-time highs at 612 and some change, both of these on the same day were doing relatively the same thing. They made their high at 62.86, and they came back and they made the other high on 9.7. This is on 9.6 high. And then 9.7, the high is 62.87 by 1 penny. How about that? But then from there, we had come down to the lows, which we had put in recently, just yesterday at 59 and a quarter. But it closed at 60.43. And this is what the test of the daily moving average is, called simple daily moving averages, called standard deviation technical analysis. We use something totally different in our market maker platform, but this is the model the public will look at. And this is where the tests are for you new MMTs. So all eyes are going to be on it. And the best thing to do when you're at multi-year highs and you're in a calendar year where who knows what's going to end up happening with the rest of September and what earnings season is coming up. In October 8th it'll start, but where does the warning seasons come into play? I would say MMTs, and for the longer ones and longer term position management, is that you start selling 3/4 of the position and let or sell 60%, keep 40%, but really you should be selling 70% into the highs here. And then hold the other 30%. If they pop it on the FOMC meeting, we see the broader markets could pop right up, but then we would be looking for that price exhaustion reversal in the indexes and equities. And just remember, the TQQQ is also part of QQQ, this one right here, power shares, the triple Qs. Except this one is in a format, we call it a bull, the TQQQ. And it's an ETF, so if you're long both of those, you get paid twice. We teach you how to get paid this one and the other one at the same time. And so we'll talk more about this with people who are really wanting to be involved. Markets have changed a little bit, and they're going to change in the future again. However, for every front end of a trade, this is called the bull, we look at where SQQQ, the bear, can be bought. And when I show the bear chart, this is the other side of that, TQQ now. So look, when we look at where these are at calendar year lows, this can be bought as a hedge at the bottoms here against this TQQ here. So if you're long, as you probably, well, we have people, when you're long here, what you're going to do, it's cheaper for you to go in here and start buying this side. In case this side pulls back, you're in play down here on the bear one at, well, almost calendar yearly lows, multi-yearly lows. Right here. This is it. So it pays to be a buyer at the lows here so that, yes, you're hedging the position based on the FOMC meeting. This side is the cheapest side. This side has already ran huge. So it pays to go ahead and start buying these down at the lows here. They don't move a lot. 44 cents intraday so far, 72 cents. They're not your big bang betas that we make markets on. No, they're used for risk management controls. Please sign up and learn how to use these controls. Bear and bull setup.